Nielsen Holdings was one of the biggest IPOs back in the heyday, and now it's shaping up to be one of the biggest IPOs we're going to see in the U.S. over the past few months. Now, here's a company that basically tracks television audience measurements and their ratings, and it's basically the metric that's used by the industry. Just this morning, they filed for a $1.75 billion offering in the public markets, and Betty, they're going to use this money to pay off the more than $8 billion of debt they have on. Remember, 4 years ago, private equity shops piled on this debt to take the company private, and if you look at their ownership, it's really a who's who of private equity. So we're talking about shops like KKR, Carlyle, Blackstone, Tommy Lee, Hellman & Friedman, and AlpInvest all owning the company right now and taking it public. And if you take a look at their investment thesis, this was really a cost-cutting story. They wanted to go in there, rip out some of the costs in that business, make it a little bit more streamlined, and you're actually starting to see some of that play in the results. If you look at Nielsen's most recent numbers, you can see that net income for the last 3 months was actually $42 million. This is up about $40 million from last year, which they only posted a $2 million net income, and also revenues have been holding up about a 9% increase this quarter.